Hello, everyone, and again, thank you guys for joining. On behalf of our president, Ms. Paula Glover, she wants to thank everyone for participating on this webinar. I'm going to turn it over to our vice president, Mr. Tracy Woods, who will give you some housekeeping rules and a quick overview of how this session will run.
Thank you, Aaron. As Aaron said, I'm Tracy Woods, Vice President of Operations here at AABE, the American Association of Blacks in Energy. I also want to bring you greetings from our President CEO, Paula Glover, who was unable to join us today. She really wanted to be here, but she had a prior commitment involving members of the U.S. Congress. Otherwise, she would be here. I want to thank you as well for joining today's webinar, utilizing blockchain to modernize the grid. It's important for you to know the three things that came together so that we were able to rebroadcast this webinar. Number one, popular demand. For the folks who saw this session during our 41st conference a month ago in Las Vegas, as they filled out feedback surveys, they really raved about the panelists and their presentation and wanting to know more information. And then we had overall conference feedback, but this was a concurrent session, and folks were committed to some other sessions and really wanted us to do something so that they could hear from the panelists about blockchain, what it's doing to the grid. And then finally, the panelists, last but certainly not least, the panelists came together afterward and posed the question or the request that they comment and share again. Each of them to a person was very willing and gracious enough to share their time. So I want to give you a brief introduction of who they are and what they do, and our moderator for the session will share more during this time with them. We have with us on the call today Marc, who is the Global Policy Leader for Energy, Environment, and Utilities, part of Global Business Services at IBM. We have also Todd Hillman, Senior Vice President and Chief Customer Officer at Miso, or the Mid-Continent Independent System Operator. Dondrey Taylor is co-founder and Chief Technology Officer at Decentralized News Network. And then we have moderating this panel, Chet McGensy, founding partner of Cornerston Group. Couple of housekeeping things, and then I'm going to turn this over to Chet. You will see as you work through the Zoom platform that you can ask or pose your questions in an available field at the bottom of your screen. We want this to be an interactive session, so I encourage the questions. And what Chet will do is review your questions in advance and pose them to the right panelists. So feel free to begin as the session begins. Feel free to start loading your questions. And then also want to make you aware that the last 30 minutes we are reserving. We want to reserve time so that we get to as many questions as we can field. So the last 30 minutes will be questions for the panelists. And then finally, this webinar is being recorded. So I'm sure you're going to have questions from people afterward, and we'll look to get the recording out. So let me get out of your way and introduce you to Chet McGensy, who will moderate the session. Take it over, Chet.
Thank you so much, Tracy. Good morning, everyone. Again, my name is Chet McGensy. I'm the co-founder of the Cornerston Group. We are a legal and policy consulting group that consult clients all around the country. One of our areas of specialty is cryptocurrencies and blockchains, as we're advising a lot of trading platforms and token companies and blockchain companies around the United States on a variety of legal issues as this area continues to emerge. And so I'm so excited to chat with you all today and bring together these really great panelists to talk to you about blockchain. So again, for those of you who are newbies to the space, a lot of you probably have heard a lot about cryptocurrency like Bitcoin, Nexus, Ethereum. And so those typically are, you hear about the tokens, but there's also, with those three tokens, also an underlying blockchain, which is really unique and interesting. And that's really what we're going to focus on today, is on the blockchain. and not so much on the tokens and speculation and everything else. So with that, let me kick this off by first turning this over to Dondrey to provide us with a initial introduction to blockchain technology and some of the work that he's been involved in.
Perfect. Yeah, thank you for that introduction. So just I guess a little bit about me. So I kind of got into the space through cryptocurrency mining with my co-founder of DNN Summit, and basically, we started out doing some things with like kind of Bitcoin, setting up some machines with that, and then from there we kind of found out about Ethereum, which is one of the top blockchains right now, and just some of the things that we can do with that and creating applications, and it kind of got us thinking about a lot of the different applications of blockchain that can be used outside of just cryptocurrencies, and it kind of just set us on this quest of coming across DNN and everything that's happening with news. So with that, I would like to kind of get into my presentation. Just make sure I have the access to. Oops, go back. Okay, so I'd like to kind of start off. I mean, we've all heard of Bitcoin, we've all heard of and some of the things that we can do about it, but very seldom do we really talk about blockchain, really the technology that underpins that. So I want to basically, the focus of my presentation is going to be on explaining what the blockchain is, and trying to give a more grounded examples that will really get the point across. So again, the company that basically I'm representing, that I co-founded, is DNN, and basically the idea of DNN is it's a news network that is not run by any organization. So if you kind of look at the landscape with media right now, you typically have a very select few families, or even companies for that matter, that own majority of the media right now, and it really just comes down to like 6. And if you look at how they're structured, they each have kind of like their own political agenda, political ideology, and really the focus has been kind of shifted away from facts and more onto sensationalism and storytelling. So the whole idea with DNN is we're essentially leveraging the blockchain to get people more involved with vetting, news that's factual and open in its representation without the need for ad revenue. And this is all underpinned by the blockchain. So what is the blockchain? So a very simple definition of the blockchain, it's really just a database. So if you think of kind of like an Excel spreadsheet where you're able to add in entries, and that data is kind of stored in columns and rows, the blockchain, or more formally a distributed ledger, is essentially that type of data structure, except that it removes the need for a company or an individual in maintaining that data. So for example, if you're going on a website and you're submitting your data, that data is going to a particular company that houses that information. So with the blockchain, we essentially are taking this structure of storing information and giving it to the public and allowing them to do that in a way that does not rely on trust. And that's really the key to the blockchain, is this trust layer. So like I mentioned, blockchain is just a database, and there's plenty of other databases out there that are widely used. So you have MySQL, you have Oracle, you have IBM DB2, MongoDB. These are all databases that behind all the applications that we use on a daily basis, all of that information is maintained and stored within these repositories that are widely used today. And the blockchain is just another type of database that can also store information, except it does not rely on a company to house that information and to update that database and whatnot. Although I will get into the different types of blockchain, because there are different types. So what makes the blockchain different from the other databases? It's actually quite funny, because I think this is like the most I've ever heard people talking about a database and really getting excited about it. So the main difference is with the blockchain aside from the fact that, you know, you don't have to rely on a company to maintain it, is that one, it involves, it's openly accessible. So typically the way databases are today is they're, you know, housed within a company. You don't really know the contents of the database, right? You can't go inside of Facebook's database and say, oh, you know, there's my information and this is how they're accessing that information and whatnot. You don't know that. So with the blockchain, it's openly accessible. So going back to the Excel spreadsheet example, it's like someone shares an Excel spreadsheet through, let's say, Google Sheets, and you're able to then go in and view the contents of that. So the blockchain is that. Secondly, it can operate without a network of trust. The general public can essentially participate in maintaining that blockchain database, basically storing all the information on that blockchain within their own computer and maintaining that. Third, the information can't be tampered with the blockchain. I think this is a really important aspect of the blockchain and feature that a lot of people love. Once something is stored in the blockchain, it can never be removed and it can never be tampered with, which actually makes it amazing for currency. So with currency, one of those features is, you know, we don't want, you know, someone to be able to update or, you know, increase or decrease our balance in our accounts. So with the blockchain, the ability to maintain balances that cannot be tampered with or updated is an extremely appealing feature. Fourth, the records are there forever. So even if someone did try to, you know, remove them or manipulate it, they would not be successful in doing that. And fifth, it can run decentralized or distributed, meaning that a blockchain has the ability of running across countries. And really what that allows is for no particular organization or government to censor it. Which is extremely you know, important to the blockchain. So I wanted to try to draw a similarity with what we're all familiar with of a bank account. And on the left side, you kind of see that you have like an account number, you have a balance, maybe a type of currency, and all of this is stored in a structure called a ledger, which is exactly like an Excel spreadsheet. And what this ledger keeps track of is in the online banking sector is, you know, money coming in, money going out, you know, and just tracks that flow across time. So if you look at the blockchain actually does the same exact thing, except rather than it keeping track of fiat-based currencies like the US dollar, like the euro, it keeps track of this credit, which we call a Bitcoin. So that credit actually varies. It depends on what type of blockchain you're on. So if you're on the Bitcoin blockchain, that credit is called a Bitcoin. If you're on the Ethereum blockchain, that credit is called Ether. And this credit basically can get earned over time by participating in the blockchain. So if you want to earn a Bitcoin, then that means you have to run a server computer that is maintaining the data of the Bitcoin network, and you in turn get rewarded that credit. So even more simple example is if you look at Facebook. So with Facebook, you have yourself, you interact with Facebook, you may upload photos, you may add a video or comment, and all that information is uploaded to Facebook, the company's servers. So, you know, whether that's, you know, liking a photo or requesting a connection, all that is maintained by Facebook. And when we, you know, sign up for Facebook and we, you know, hit that agree to terms, one of the, you know, consequences of that is Facebook has the right to utilize your information in different ways. One of those is essentially selling, not, you know, not access to, but the ability to target you based on your information. So that's how Facebook works, right? So if we were to look at Facebook and try to map that to a blockchain, you would have yourself, you would have your friends on the right side, and rather than interacting with Facebook, the company's computer systems and servers, you would essentially be interacting with a blockchain. And the blockchain is just, again, a series of these computers that maintain information state over time. So things like your photos, like your profile, your friend connections, that can all be maintained without the need for a company that may, abuse that access to your information by monetizing it, and other things that can be done. We've seen the recent events with Cambridge Analytica and things that can go wrong with people who may have incorrect access to that information. So if you look, that information is stored within blocks. And every time you basically interact with Facebook in this blockchain scenario, that would be considered a transaction, and over time it would just get stored on these blocks that would essentially house your information. So when you hear the term block in a blockchain, all that means is these are updates to this distributed ledger. So using the Excel spreadsheet example, if you go in and add a row, that is considered a transaction. So on the blockchain, you have the same type of concept. If you send a Bitcoin to someone from point A to point B, that's a transaction, and that needs to be recorded on the blockchain ledger to show that happened. So that happens over time. So essentially, every certain amount of transactions, it gets grouped into what we call a block, and those blocks get linked over time, and that's where you get the term blockchain, because they're all chained together. And the more blocks that get added, that represents time. So if you go to like block 1, it's a very predictable interval. So in Bitcoin, it's every 10 minutes, there's a new block. In Ethereum, it's every 17 seconds, there's a new block where it groups the transactions. So this is kind of like an overview of how that looks. So if somebody sends Bitcoin to someone, that is a transaction, and that gets broadcasted to the network, and this is the network of people that are participating in that network. So maybe another example, if you think of how like the Visa network works. So the Visa works with other providers like MasterCard and their networks to essentially keep track of your balances, of who has what bank gets contacted. That entire network is now being offset to the public to handle. So that's what this represents. And it's their job to validate and verify whether or not you have that credit, whether or not a Bitcoin was sent to you and you have the right to send that to someone else. And that's their job. And like I mentioned, there's different applications that can be done with this type of paradigm. So, there's no need for, any type of reliance on, for example, like a central bank that needs to issue this currency. Everything could be maintained by the general public without the need to trust anyone. So there's different types of blockchains. So there's essentially 3 types. There's a public blockchain, there's a federated blockchain, there's a private blockchain. So the public blockchain, I like to draw the example of the internet. So the public blockchain could be thought of as like the public internet. So you're going to have things like different applications running on the blockchain that everybody can interact with. Everybody can see the contents of that blockchain. So that's the public blockchain. Then you have companies coming out with their own that basically want to take the technology of the blockchain and use that to streamline some aspect of their business process. So one of the pioneers in this space actually is IBM. And one of the amazing things that IBM has been doing is they have been taking the blockchain technology and allowing companies to adopt it into their own workflow, whether that's through managing records or orchestrating some type of payment processing or settlement processing on a blockchain. And they're allowing people to tap into that technology and use it within their own business without really having to develop that on by themselves. And then you have this other type of blockchain called a federated blockchain. And this essentially does not rely solely on the public to maintain. So you have companies, so essentially you have private blockchains, which are just behind the scenes. You don't really know that you're interacting with the blockchain in a private manner. But then you have federated blockchains. We have companies offering the blockchain to people to utilize. So you have part of the people running that federated blockchain in a public sphere, and you have part of the private sector also running that chain as well, and people interacting in that regard. So here's just a few use cases for the blockchain. So probably the number one and really what got us all involved in it is through the currency aspect and assets that can be maintained on this ledger. Two is voting, and this is something that we're looking into DNN, where we can allow people to essentially vote on articles and whether or not they're open and transparent. But even more so, there's actually a lot going on in different governments of looking at how can we use blockchain to enhance our voting system for government. So it's a really amazing. What makes really awesome about blockchain and voting is that, again, that tamper-proof feature of blockchain. So if we looked at maybe like the recent election 2016 and the whole idea of hacking in and changing votes, that would not be possible in the blockchain because it just wouldn't allow that. You have logistics, things like FedEx, UPS, tracking, being able to track the flow of packages. And even more so, not even packages, there's also things coming out with vegetation. So people, let's just say a particular, E. coli or some strand came out, you'd actually be able to trace back where that came through the manufacturing flow, because all of that will be recorded on the blockchain for everybody to see. There's a lot of things going on in medical, of storing medical records. There's this whole thing about HIPAA compliance and also portability of your records. The fact that you can go to a hospital and ask for those records. There's now things going on where those records can be stored on a blockchain that you can then just freely access. Of course, they'd be encrypted and stuff like that, but that's an area that's being looked at. Law and contract law, because blockchains cannot be manipulated, actually makes it very, very suitable for things like escrow. So things like representing that you own a particular house. And storing that on the blockchain is very interesting. And as we're all familiar with, is energy. And there's a lot of things going on with energy. There's two really big projects going on with We Power and Grid Plus. And essentially what they're trying to do is they're trying to go into deregulated markets and looking for a way to interject the blockchain in handling things like energy credits. And really just streamlining some of the processes that go into paying people along the way of an energy distribution. You have identification with IDs. So there's in Estonia, they actually have this concept of e-identification or e-citizenship, and they're actually using the blockchain to essentially provide you with an ID to Estonia. Entertainment's a big one. Things like streaming, licensing. Basically allowing people to profit off of the rights to their off of their music or videos, and being able to track that is going on. And as I mentioned before, agriculture is a big one, and in media, and that's what we're doing with DNN, the whole journalism aspect of creating a self-sustaining model where you don't have to rely on paying people with fiat, but you can pay people in this this cryptocurrency that sits on top of a blockchain that isn't reliant on things. So there's plenty of things that can be done with blockchain, but the one takeaway that I would give to people is that it's mainly a database, and it's a database that is not reliant on a particular organization or person to run. And with that concludes my piece.
Hey, thanks so much, DeAndre. Now we'll move over to Marc Lammond at IBM.
Well, thank you very much. I appreciate that. I think that a lot of the things that DeAndre said, I'll be sort of building on. So I appreciate that lead in. Are my slides here? Let me see. Okay, here we go. So as was mentioned earlier, I represent IBM's Energy, Environment, and Utilities Group. We're the part of IBM that's focused on using advanced technology to help energy and utility companies, including water utilities, that's the environment part of the name, to harness their data and leverage technology to optimize their operations, increase their efficiency, and reduce expenditures. We do this through a number of different technological applications, including AI, cognitive computing, sensors, controls, and the Internet of Things, cloud services, and of course, blockchain. So these are the kinds of examples of the kinds of technologies that we use to help energy and utility companies to better manage their resources, add mobility to their capabilities, and get up to speed and keep up with cybersecurity requirements. Now, moving on to blockchain specifically, there are a lot of different definitions, but the one that helped me understand blockchain better is to think of it as an automated operating system for information sharing networks and markets. So it's sort of the underpinning for these information sharing networks and markets. And IBM, as Dondrey mentioned, is a leader in blockchain applications. Just to give you an example of IBM's leadership in the space, in a recent survey of more than 400 tech industry CEOs, more than 40% identified IBM as the strongest corporate blockchain provider. That was more than twice the number of CEOs that identified any other company. IBM currently has more than 400 blockchain applications running for clients across the economy and around the world, and we have more than 1,000 employees globally focused on the development of blockchain and blockchain applications. IBM's particular approach to blockchain, is Dondrey showed the range in his presentation, and we're focused on permissioned blockchain applications as opposed to the open ones that Dondrey highlighted. So in permissioned blockchain, the participants have the opportunity to pre-select, pre-qualify, pre-certify other participants in the blockchain network. You'd want to do that in certain applications because it reinforces the trust factor in blockchain networks and provides a way to increase that trust amongst blockchain market participants. IBM blockchain applications are supported by the Linux Foundation Hyperledger Fabric. That's a code base with a technical and organizational governance structure attached to it, launched in 2006 and still supported by the Linux Foundation. IBM was a part of that launch, and we still run blockchain applications, explore different blockchain applications through that community run by the Linux Foundation. I wanted to bring some contrast here to show and talk about what blockchain is not. That could help the understanding as well. So blockchain is the technology underpinning cryptocurrencies, but blockchain is not Bitcoin. Those are different things. Blockchain is a framework for building markets and communities, but blockchain is not a product in itself. Blockchain is not fully mature yet. So blockchain has a potential to transform a number of markets in ways that we haven't even thought of. So it's not a fully mature technology yet. And just to put a note here that blockchain is not always anonymous. So I think that, as I mentioned just a minute ago, IBM, for instance, focuses on permissioned blockchain, in which the participants in a blockchain market will certify and give permission to the two other participants to join that market. So blockchain is not always an anonymous technology. I wanted to highlight some examples here, some case studies of how blockchain is being applied specifically in the energy sector, starting with this one. So TenneT is a European utility transmission operator headquartered in the Netherlands. They operate in the Netherlands and Germany. The backdrop for this particular situation is that the EU has been focused on reducing carbon emissions. The European Commission, which governs the EU, set up regulatory guidelines for EU countries, established a Clean Energy for All plan, which set a collective target of at least 20% renewable energy for their utilities by 2020 and 27% by 2030. Together with IBM, Tenet has embarked on a first-of-its-kind implementation of blockchain technology in the energy and utility industry in Europe, forming a virtual power source, a networked pool of electric vehicles and home energy storage systems for Tenet to tap into instead of relying on additional generation. The automated nature of the blockchain market allows Tenet to form a partnership that complies with regulatory requirements. Those regulatory requirements can be built into the system so that automatically Tenet can comply with those requirements. Due to the accountability and security features of the solution, Tenet can partner with other renewable energy companies and its customers across 2 European countries. The Linux Foundation framework allows for verification and documentation to accurately record transaction values of distributed flexible energy devices integrated into the grid that are providing the power. The success of this Tenet application led to the formation of this sort of spin-off called CertIQ. CertIQ is a 100% subsidiary of Tenet that issues guarantees of origin for renewable energy. So the transparency that blockchain provided for the network allows Tenet to know exactly what energy is on the network and how it's sourced. So CertIQ has now been designated by the Dutch Minister of Economics, Agriculture, and Innovation as the only company in the Netherlands that can legally issue the guarantees of origin. Now CertIQ is working across Europe to help standardize these types of renewable energy credits and energy trade more broadly across Europe. So this is a way that blockchain is enabling renewable energy credits and the trade thereof. One last example, Trafigura. Trafigura is one of the largest physical commodity trading groups in the world. It's headquartered in Singapore. Trafigura sources, stores, transport, and delivers a range of raw materials to clients around the world. Now, traditionally, the oil commodity trading process was based on rather complex workflows facilitated by paper-based processes that were supported by email, even fax, and unfortunately, even paper courier. The new trading platform enabled by blockchain allows trade documents, shipment updates, delivery, and payment status to be shared across a single shared ledger, dramatically reducing transaction times, eliminating unnecessary duplication of documents, and streamlining the authentication process. The demonstration of this successful approach by these market leaders now stands to transform crude oil commodity trading and extend those techniques to commodity trading at large. The platform is being updated to allow for more real-time updates and increase security by finding ways to broaden participation in the blockchain market while reducing the potential for fraudulent transactions. So these examples that I just talked about and some of the examples that Dondrey talked about, this sort of shows the ways that blockchain is changing markets, catalyzing this sort of revolution in various markets, including energy, and in some ways that we may not even be conceiving of now. So I'm excited, for one, to see what blockchain will do in energy markets, but I'm also excited to see what blockchain will catalyze in other sectors, some of the ones that Dondrey mentioned and others. I think as an early industry adopter and a showcase for blockchain applications, energy and utilities groups, and others in finance, insurance, agriculture, mining, are helping us to understand this new era of information and finance technology that will transform the grid, but a lot more. So with that, I will end my comments for now. Look forward to the Q&A, and thank you once again to AABE for doing this today.
Thank you so much, Mark. And before we move over to Todd, I just want to remind everyone that we do have the Q&A panel as possible. We have been getting questions that have been coming in, but if you feel free, as the presentations are going along, to submit your questions, and we'll answer them during the Q&A section. So Dondrey and Marc really laid out very clearly for us, so the structure of blockchain, some of the potential applications. And I think the really exciting opportunity is to really talk to Todd now about what the applications, what those potential use cases could be in the electricity industry from his perspective. So we'll turn it over to Todd to talk a little bit more about that.
Thank you very much. Oh, man, that was fast. Well, good afternoon, and thank you very much for the opportunity to join you. And Marc, Dondrey, thank you for setting this up for us. I thought it was funny that Marc said he's got 1,000 people working on it. We've got at least 4 or 5 here that are, working really hard on it. But hopefully at some point we can get our numbers up to be closer to that of IBM's and others. But my goal for today is really to try and get you that macro view of what we're seeing in terms of the footprint that we serve and the utilities that we're working with and some of the thoughts that we have around it. But so just a little bit quick on Miso and what we do. We are a nonprofit 501c4. So when we think about things like distributed energy resources, solar, wind, new transmission, demand side opportunities, we're trying to do that to really see how best it will serve the public benefit. So that's a focus that we have. Our footprint is quite large, and if you think about that footprint, you've got all the way from a lot of wind penetration in the far north part of our footprint, a lot of industrial development and thought in the central part, and then certainly you've got natural gas from the Gulf of Mexico for our south region. About 190,000 megawatts of generation, along 66,000 miles of transmission. We've really seen the onset of wind as the primary technology to date, but I'll get a little bit deeper into that. So if you look at the evolution of the portfolio, I think this is just the tip of the iceberg. Just about 10, 11, 12 years ago, we were looking at 2/3 or even 3/4 of the energy being developed and produced were coal-based. And then certainly between nuclear and a little bit of gas, you basically got all of it. Now you're starting to see renewables play a bigger role. You're seeing obviously the replacement of coal with gas. That's only part of the story. And this is really the supply side resource and really now the switch to what we're seeing more on the demand side of the resource. So you ask yourself, well, Todd, this is a big wholesale market. Why would you all be thinking about, interested in, and focusing on blockchain? It's really that look from all of the large scale resources and what utilities used to call those big units, and scaling into now what is a different portfolio evolution going forward. So as the industry evolves, I mean, we've been talking about this blockchain technology specifically here. I also want to just put a little bit of a reality on this thing in terms of all the externalities that we're facing. And so there is a regulatory reality that we have in the sense that part of the Bitcoin bias and that fatigue we have a little bit over Bitcoin was a lot of discussions about regulation. Well, who's going to regulate this thing and how's that going to work? If there's anything that we've seen in the utility industry is a lot of regulation and a lot of compliance. So you've got federal and state policy you've got to thinking about. You've got fuel and oversight over the fuels that you have, known and unknown risks. What happens if a state is regulated versus deregulated? How much of the traditional versus the unconventional entrants do you see? Typically, you haven't seen that much of that in the regulated utility space. You see more of that in the deregulated states, primarily on the coasts, in the northeast part of the U.S., as well as on the west coast. Technology, you're certainly seeing more in terms of going from those large-scale resources to smaller-scale resources. May still be utility-based, but now you're talking about solar projects that instead of rooftop are utility scale, 10, 20, 30, 50 to 100 megawatts in size. Stakeholders, your dynamics there have changed. You're seeing a lot of mergers within the industry right now. You're seeing a lot of member changes. You're seeing new sectors being developed. And then certainly as you look at regulation, that is something that is always evolving and changing. If you've been spending time listening to what's happening with the Trump administration with the Department of Energy and trying to look at coal-based generation as it relates to national security and national emergencies. So that's an interesting and creative way we have seen folks starting to talk about one fuel over another fuel. And I guess this is the part of the presentation where I say that Miso is fuel agnostic. Certainly we're there to make sure that we're the states and the purview of the states is maintained and best handled. Our role really, as you see on the right-hand side of the page there, is how do we ensure reliability? That's job one. We've got to be efficient in how we operate. We've got to make sure that we're building infrastructure and investment. For us, that's primarily going to be transmission and wholesale transmission and markets, and better markets to handle what could be coming forward. And then certainly working with the policymakers in terms of what they're thinking about as well. And I have just figured out how the buttons work. Okay, this slide should surprise a whole lot of people. So if you look at just a couple of years ago, this is our generation interconnection queue. So these are folks within our 15-state footprint that are interested in what they think the next generation type will be, and trying to get in that queue via either a request for proposal process or part of their integrated resource plan for their state or region. As you can see, just a couple of years ago, that was mainly around natural gas replacing coal and a little bit of wind. As you've seen those production tax credits for wind stay online, that wind number has grown, but look at 2017 and 2018. What that is showing us is outside of a little bit of gas replacement of coal, you're seeing the majority of our interconnection queue being wind and now solar, almost competing with wind for how much that's taking over. Our whole footprint, as I said, was 190,000 gigawatts or 190,000 megawatts. This thing is 90,000 megawatts of people trying to get these variable resources online in our footprint. Now, certainly you've got a little bit of storage. It's about 600 megawatts of storage that's included in this footprint. But you're talking about almost half of the entire portfolio right now being looked at, added to, or replaced with a variable zero-cost resource. So think about all the other fuels and the fuel costs you have. You're looking at a reality that says at least some part or a larger part of the footprint will be operating with a zero marginal cost. So for us, it's all about, well, how do we get this interconnected? But more importantly, think about the size, the complexity, and the bandwidth of transactions that you might see as you start getting away from the 1,000 megawatt power plants into multiple smaller resources. And really, that's going to be the key for us. Emerging technologies for us is a reality. So electric vehicles, a question that we ask ourselves a lot here is, well, what would you have to believe for this to be true? What would you have to believe in terms of the rate of adoption, at least in our footprint as well as other footprints, for this to take place? In many cases now, it is more the regulatory push than it is the customer pull. So for every, California just made a huge investment into electric vehicles, $750 million. New York just made an investment as well, around $250 million to try and get electric vehicles a bigger part of that. Yet the other side of that coin is Tesla just announced today that they're going to lay off 9% of their workforce because the orders and the delays in terms of their Tesla manufacturing hasn't gone as they had expected. Energy storage, as I mentioned, is a piece of the pie, but certainly not a big piece. What we're seeing more is that distributed generation, that wind generation. Now we're seeing more of that large-scale solar, not necessarily rooftop, but more utility scale, that is starting to take a look at. And we say, okay, maybe 2-3 years from now, you may not see that much. But what are we looking at 5, 6, 10 years down the road? And what systems do you have to have in place? And how do those systems need to operate? These are the conversations we're having with our customers. Those are the utility companies, municipals, cooperatives, large end users within that 15-state footprint. They're all trying to lift their head up and say, okay, as I think about serving my customer in a lower load environment, what do I have to believe to get there? Is the line between the wholesale market and the retail market starting to blur a little bit? Right now, that line is pretty fine. You have a investor-owned utility in a state. They own the customers. They own a large majority of that data. They're working with Miso more on the wholesale side. So that is trying to keep the system reliable, make sure that the lines at the wholesale side are maintained, operating efficient wholesale markets, and developing wholesale transmission. But now as you start to talk about what this move is towards more of these zero cost resources, more and more of those, that line between wholesale and retail starts to blur. All within the reality that the regulatory environment around this is also constantly changing. So we've got to get ahead of this thing. So if you think about that portfolio evolution, if you think about the advancements in technology, I don't know about you, but I have 16-year-old twins, and if I have any questions about how anything works in my house, I ask them, and they can figure it out a lot faster than I ever could. However, on top of that, you also are going to be faced and burdened with a regulatory reality. In regulation and regulatory markets, nothing ever happens fast. In fact, we've seen some cases with some municipal systems where these blockchain folks have come in and tried to set up these large data centers, and basically they have passed legislation to not allow that to happen. The reality is, if you look at an average supermarket, they use about 40 kilowatt hours per square foot. Some of these data centers use 2,100 kilowatt hours for that same square foot. So it's the reality of how big is too big, the reality of what that load growth looks like, what special software might be in place. So those technology advancements, while encouraging, I think sometimes are met with that regulatory reality that I mentioned. But no matter what the case is, when you look at the role of Miso, I've got to figure out what I need to have going forward. So certainly I need reliable systems, but I think now we're starting to think more about flexibility. So as more of those resources come online, as blockchain starts to more embed itself into the utility space, we've also got to think about flexibility. These resources tend to act very quickly. We need to be able to monitor that and make decisions on a real-time basis. Interdependent. So these resources are interdependent on each other. If you look at how solar operates and wind operates, they tend to really operate in opposite directions. The wind tends to blow in off-peak hours. Solar tends to be obviously when the sun is out. So you think about what resources you need around that to make sure that the system, while working independently, is interdependent in how they do that. And in all of those things, we've got to continue to learn from what we know. So the system 5 years ago is not going to look like the system 5 years from now. How do we figure that out? And amongst all of that, as you think about cyber, as you think about all of these technologies, with technology comes cyber risk. We've got to make sure that it's robust, resilient, and secure. So as we think about it, I think there are folks that aren't even dipping their big toe. They're probably dipping their pinky toe into the water and exploring blockchain. You have what's called the Energy Web Foundation. It's a group that's looking for the best use cases in our sector. So you see the big three there. So system optimization. So think about ways that as your units are coming up for maintenance or as your units are running, how can we best optimize the information that comes out of that? Obviously, billing is a big piece of this. The main interaction and the reality between most utilities and their customers comes in that bill cycle. So, instead of, bill inserts nowadays, it's a lot about emails, texts, and other correspondence, but getting beyond that bill and trying to have that more information relationship with their customers. And then certainly, as Marc mentioned, you think about trading and interaction platforms where energy is trading hands. That's certainly a way that our customers and our folks are exploring that. I think the other reality to put here is a lot of this depends on the area of the country that you're in. If you look at some of these companies, they tend to be in areas where your wholesale rates and even your retail rates are higher. In the central part of the U.S. where Miso is located, you have, the good news is you have very low retail rates. The bad news is you have very low retail rates. So folks aren't exactly looking to these new technologies because at the end of the day, they ask the first, second, and third most important things for their customers, and they'll say it's low rates, and then after you're done with that, how about low rates? So these things tend to be add-ons, the extra things, the cherry on top of the sundae. For some utilities, that's just that's not worth the squeeze. So they don't get into that arena. But you see some here: PG&E, Exelon, Duke Energy, and others. Sempra obviously getting into the space and trying to explore what's possible. So just to double click on that a little bit as you kind of drill down, these are some of the things that we've talked about. I would say the applications that make the most sense that we've heard about tend to be on the accounting side and the transactive energy side. So if you think about the realities that a utility might be realistically facing in the next 3 to 5 years, it's demand response, it's electric vehicles in homes, it's management of that distribution system. It's a little less about that point-to-point energy trading, but building that total home and energy management system. The reality of the footprint is the more that we're seeing all of these technologies come about, think of the appliances you buy, the light bulbs you put in, that's resulting in lower loads. So the utilities have to get beyond the traditional model, which is the higher the loads, the more money we make and the more our shareholders are happy. Double click on that a little bit more, you start to look at the accounting side of this. So renewable energy credits can be big depending on the area you're in. Retail billing, if you can get that more efficient, that's a huge part of a utility's bottom line. And then that asset registry I talked about a little bit. If I can track an asset through its life cycle, if I can look at the key parts of that, operating and maintaining these units is also a big part of a utility bill. And then at the end of the day, less about the tokenization of the assets, but more the security and the securitization of those assets. So think of grid security, the connection of that Internet of Things with the distributed energy resources that we're starting to see, and making sure that as that wholesale retail line blurs, that we can do that in a reliable and compliant manner. So the question we get a lot from CEOs and other senior management is, okay, so when will this come? How big will the change be? Is it radical and disruptive in how it's going to come? So will it trickle or will it gush? You know, regardless of how that's going to happen, I think we're going to start to see areas of blockchain affect the organization. So think of troubleshooting as a big one, right? A system of systems, how you can decrease approval time to add efficiencies. I know from just a pure Miso perspective, just in our daily systems, we manage about 4,600 values per day, or 1.7 million transactions a year, just on the settlements and the contract management side of our business. So at the end of the day, with the utility and or someone like Miso being that system of record, that central model, if you will, how does that take place over time to where that might get a little bit more decentralized? So instead of all being in one place, it may be interconnected, but it may not be as centralized as you think today. So what would you have to believe for that to happen? I think you've got to see more game changers like battery storage, more pilot programs taking place in states or within utilities, more smart meters being applied, and those smart meters getting beyond just the traditional time of use rates or information and data exchange between customer and utility. I think the other piece too is you got to look at transparency of data. So how transparent does this data need to be? How efficient is that data, and how efficiently that data moves back and forth? Because right now the unfortunate reality is, or reality as it is, more people spend time looking at their cellular bill than they do looking at their utility bill. So how do we get more folks interested in this on the demand side so we can see the right amount of change that happens at the right time? So the bottom line is we think that it shows promise. We certainly are focused on it and spending some time on it. I can tell you that we're talking with a whole lot of smart folks, not only at our utility companies, but also with think tanks, universities, and other foundational establishments to try and figure out how we can work together to better understand this. From us, I think it's the middle part there that we really want to spend some time on. If there's one thing I leave you with today is think about who owns the customer data and who can access it. So I'll give you a broad example, and then as we get into the Q&A, we can dig deeper. But if your house has a security system, and your house has a smart meter, your house has a smart thermostat, and your house has a overall utility energy services plan, who owns your data? Is it your data, Is it the utilities data? Is it the company that owns the Ring doorbell you have or the cameras outside your house? Who can access that data? And as a result of accessing that data, what implications does that have for both the end user and the folks that are along that chain? We're excited about artificial intelligence and machine learning. That's a big part about what we do here at Miso. Control systems for things like solar inverters on rooftops or water heaters, all the way up to those systems at a utility scale level. How do we integrate all that together? Because at the end of the day, this has got to be reliable, it's got to be efficient, it's got to be secure, and it's got to be something in a way that the regulators in our 15 states, as well as across the country, and on Capitol Hill in DC, can see that this is helping our end-use consumer to get better service or realize that there's a value there that they haven't realized. So lots of questions to answer. We're asking a lot of them. We look forward to hearing yours as well. And with that, I'll turn it back to you.
Fantastic. Hey, thank you so much, Todd. I think that as we're looking at this evolution and growth of blockchain, one of the areas, again, that's so critically important is understanding electricity usage. Morgan Stanley just recently stated that they believe that Bitcoin's blockchain, based on its current algorithm and all the people who are mining the coins, they expect that the energy usage from that data mining for Bitcoin this year to eat up more electricity than that in the entire country of Argentina. So just for scale and understanding, what's going on around the world and the need for electricity usage and sort of the interplay between the development of cryptocurrencies and blockchain technology and what that means for those of us in the energy space is incredibly important. And so I know one of the areas that a lot of folks have been working on, I know IBM's also been working on it, is sort of a greener blockchain, and also looking at some ideas around doing some off-chain transactions that then sort of translate into on-chain transactions in an effort to reduce the overall electricity usage. So can any of you speak to some of those efforts and the idea of sort of greening up the blockchain?
Chet, I'll jump in first. I think if you look back to the slide on, the significant and dare I say radical evolution of what this generation interconnection queue looks like, I think this is the new reality, right? It used to be, as I mentioned, that a normal customer, and it didn't even matter, leave the coasts out of it, for the greater 46 states outside of California and let's say New York or New England, it was all about reliable and low cost. But even now, even today, as we look around our footprint around the country, the word green is now a normal part of the utility conversation with the consumer. I can tell you 20 years ago, recycling was a niche thing, right? You had that in some areas, and now recycling is just, if you don't do it, you're kind of looked at sideways. I think we're starting to see that tipping point on the green side as well. But what that does is that now shifts the conversation away from large scale to small scale. And I think that's the area that we need to be very careful with as we think about.
Oh, I think we may have lost you, Todd. Marc or DeAndre, did you guys have any comments on this?
Yeah, this is Marc. Let me jump in here, dovetail with Todd a little bit. I think that from the technical side, this is one of the benefits that you can get from permission blockchain. So you're talking about, as you mentioned, Chet, building in some of these rules and guidelines ahead of time into your network so that your computing system doesn't have to sort of sort through these possibilities on an ongoing basis and maintain these kinds of rules on an ongoing basis, that they can be pre-programmed into the system so that that filter is already there, and that can reduce your compute power. I should also say that on the technical side, IBM has been, through its Global Technology Solutions division, a leader in sort of energy efficient computing writ large, not just with regard to blockchain, but with regard to high performance computing in general, finding ways to get energy consumption down through things like different cooling solutions, different chip technologies. So we've been working on it from that angle as well.
Yeah, and I also wanted to add on what Marc was saying, kind of about you know, the whole rule set and adding that to the blockchain. But I definitely think what it's going to bring to the table is you know, this new form of interoperability between systems. So you know the way kind of things are in the tech space, you know, a lot of times when it comes to like integrating with systems, you know, that in and of itself requires an additional layer of development and whatnot. I definitely think blockchain eventually will, you know, start to make its way into allowing people to kind of connect their systems in a more seamless way, because that, you know, that layer for interoperability is transparent and open. And, you know, I think that's definitely going to be a future use case of the blockchain.
Great. So several questions have come in asking if this call is being recorded. And so, yes, the call is being recorded, and the podcast will be posted, I believe, to the website for those of you who want a copy. And also the presentations and slides will also be available as well for everyone. So there was a question that came in directly from Marc. And Marc, the question is, what other applications are under development in the oil and gas sector? Are there any specific companies developing anything significant in this space?
Well, so as I mentioned before, we worked through this Linux Foundation platform, the Hyperledger Fabric, to explore with other community members different things that we can do with blockchain, including in the oil and gas sector. The cases that I talked about today are ones that have been cleared through layers of legal and client executives for me to talk about and others to talk about. I can't mention other specific use cases for specific companies, but I can say in general that yes, we are exploring a number of different applications. Generally, I can say we're looking at also internally, internal operations for oil and gas. The case that I talked about today was with regard to oil and gas commodity trading markets, but we're also looking at how to optimize internal operations for oil and gas companies using blockchain. You can think about parts and maintenance, for instance, as an example, just generally speaking. Additionally, I can mention that if you look at shipping, so in the case of shipping, IBM has formed a partnership with Maersk Shipping Company to use blockchain and other technologies to reduce the administrative costs around shipping, including for oil and gas. Shipping, I think, administrative costs in shipping accounts for something like 30-some-odd% of the cost of that of doing business in shipping. So you can imagine how reducing that cost could drastically affect the business proposition for shipping. So those are two areas where I'd say that generally things are being developed.
Great, thank you. Another question from the panelists was, I've heard about potential defrauding in blockchain. How is it possible and how is it addressed? So I think a general question about fraud and the blockchain on sort of the private and on the public blockchains.
Yeah, sure. So I can definitely talk about like the public side of things. So a lot of, I guess, bad things that have been going on with blockchain, specifically like Bitcoin, Ethereum. We've constantly been hearing of like hacks or people trying to raise funds in blockchain and then those funds not being used for their purpose. But a lot of it kind of centers right now, I would say, around a lot of the ICOs that are going on. So that this is a term that's always used throughout the space. And ICO really just stands for, initial coin offering. And it's just a way for people to raise funds in the form of cryptocurrency that they can use to build out their projects. And a lot of, I guess, the fraud around that has just been people, coming up with an idea and a paper and putting it out there and trying to raise funds, and then they just perform an exit scam. So that's one thing that has been going on a lot. The second is people offering things that they have to register with, for example, like the SEC offering a security thing, something that's labeled as a security, but not going through the proper registration that needs to be done to classify that as a security. And then more recently, actually, there's been a lot of incidents of people getting their keys, which allows you to move your Bitcoin from one place to another. People have been getting their keys stolen from them. There's actually been a recent case in New Jersey of a guy who got, I think at gunpoint, someone had one of his private keys. So those are some of the areas that are going on now. What's being done to prevent a lot of this? So really on the ICO space, now there's a lot of sites, a lot of companies now that are doing due diligence on the team members of these projects. The amazing thing about the blockchain is you can pretty much follow all the transactions. You know exactly where the money is going, who has the money, once you tie an identity to that particular address. So there's a lot of things going on about associating the identities of these companies doing ICOs or certain individuals with whether it's when you go on an exchange, you have to provide a KYC or ID and things like these. These are ways to associate your identification with an address on the blockchain. So I would definitely say like KYC, a lot of companies are popping up with that. More due diligence is being done on ICO sales, but it's really just in terms of security, it really just comes down to the same thing as cash. You just have to have those measures in place personally to protect that, from people taking it. But I don't know if anybody else wants to add to that.
Yeah, I'll add on just by saying there are usually layers of cybersecurity built into blockchain network of any sort, including for cryptocurrencies. So that is one significant deterrent. Also, at least on a permission blockchain basis, anybody that would access your blockchain network in any way whatsoever, their presence would be immediately logged. And as Dondrey mentioned a couple times before, the blockchain ledger is then immutable and unalterable. So once somebody accesses your network, even for maintenance or review, even a licensed or permissioned participant to do a transaction on there, that presence would automatically be noted by the network, and there's no way to change that. And in order to do any sort of transaction on there, all of the other participants on the network would have to agree. So I think that there are a number of ways to build security into it, and that's another way that I think another advantage for permission blockchain is that it can be more secure in that way, in that all the participants would have to agree on letting whatever action take place before it would be finalized by the network.
Yeah.
Sure, and I would say.
Go ahead. I'm sorry.
Go ahead. No, go ahead, Dondrey.
Oh yeah, no, I was just also going to mention too, because the blockchain is very open, like the Bitcoin network, anybody can see an address and see where those funds are moved. There's actually been a lot going on the cryptocurrency exchange side of things, and even some of the wallets that allow you to interact with the coins that you have, with labeling certain addresses as fraudulent addresses. So there's actually numerous cases of people stealing Bitcoin or stealing Ether from people. And what the network collectively did is label that this address is fraudulent, and that and basically kind of give it like a reputation of some sort, so that if you're doing any business with this particular address, it's a very high possibility that this person is fraudulent. You may not want to deal with this particular address. So there are measures like that being taken in place on the exchange side of things, and also on a lot of the wallets that allow you to interact with the coins, of labeling the addresses as fraudulent. So, yeah, I think a lot is certainly being underway.
Yeah, and I was just simply going to add that when it comes to fraud, I mean, one of the benefits of blockchain really is to eliminate fraud and to create trust, because on the public blockchains, essentially everyone is able to view the transactions, and that the miners who are doing the mining, they have to again verify those transactions. So once a transaction takes place in a block, that's it. It can't be undone or erased. And so the benefit for that is that if you've already transferred, or you made a payment, or you received a payment, that payment's already done and been identified within that block. And so one of the types of hacking attacks and different things that people try to do, right, is they'll try to double spend money. Or you have issues where people will go to the grocery store, in real life, right, and they'll pay by check, but they don't have the funds actually in the account to be able to make that payment. That doesn't happen with blockchain. If you don't have the funds available at that moment that you're trying to do the transaction, or you're trying to sort of double pay, someone with the same Bitcoin or the same Nexus token or Ethereum token, those transactions won't go through. And there are people who are always constantly on the chain trying to, hack their way or try to find ways to do it. But that's the beauty of the blockchain technology. What I would say is that in sort of the real world examples where what Dondrey talked about, or sort of typical, theft, right? If someone, petty theft, someone robs you, that can happen. You also have hacking, where people can hack into your computer, hack into your accounts, and get your password and information. So those are incidents that are not sort of unique to blockchain or blockchain technology. Those things are happening currently with banks and people's traditional bank accounts. So, someone who maybe has a cryptocurrency, account that's holding their cryptocurrency may be subject to the same type of nefarious activity. So just to kind of put that in perspective. So some more questions from the audience. We have a question came in that is asking, as data is stored in dynamic data blocks, provide more insight to ownership, in quotes, cooperative agreements and compliance with public blockchains. Explain within the current state of a few stakeholders owning most of the IT infrastructure and associated IT assets.
Great. Anybody's going to take that? Or?
Yeah, that's for anybody. And I don't know, Todd, are you back on?
Yeah, I'm back on. Sorry about that. Of course, I had my laptop not plugged in. It decided it wanted to just power down during the middle of the podcast. So, yeah, I'm back on.
That's
sure.
quite all right. Okay, anybody can take it. Go ahead.
Okay, yeah, sure. So I guess I can say it from my perspective. So I like to draw the similarity with social media, because I think the social network is like the prime example of like this scenario of our data being owned by a particular organization. We're not really benefiting from it, but I think what blockchain is going to allow us to do is what it really brings to the table is this idea of incentives. You can essentially incentivize certain behavior and get rewarded for doing more of that on the blockchain. And that's something that you really can't get from the traditional tech. But in this idea of ownership, so on the blockchain, when we explain that, things are being put on the blockchain and you have access to your coins, only the person with that particular key, meaning that is your right to move something on a blockchain, that represents ownership. So in the blockchain space, any data that you put on the blockchain anything that you do to interact with the blockchain, you are the only individual or the only person with that key that can move that data. And really one of the benefits of that is that you can do some really interesting things with shared ownership and benefits from the infrastructure that we are all transacting on. So give the example of the social network, right? So the social network, the servers are all owned by Facebook, right? When you send your data, that data is held on Facebook servers, right? And Facebook as a business needs to monetize that to stay, to run their business, to pay the employees, to upkeep the servers and maintain that network. So what they do is they then provide advertisement, and they have this whole model of that. So as it pertains to ownership, like you don't have a particular stake in Facebook doing extremely well, other than the service is there for you for a longer period of time. Where this changes with blockchain is you can actually benefit and also share that ownership within the network, because there's no single organization or individual that is responsible for the upkeep of that network. So that means that your behavior, whether it's any transaction, so in the social media, that means like a like or a comment or anything like that, you are a direct owner of that interaction. And therefore you can, benefit through whether it's a coin that gets generated off that action, or whatever else that may be, by just holding a key that gives you ownership rights to the network. And this is the case of like public chains. It's different with private chains, but yeah, that's
great. Thanks. I had another question that came in specifically for Todd. Todd, what are you aware of any blockchain applications that are being used specifically in the transmission space today?
Yeah, I'm not aware of any, but it's an interesting conversation. And there's a line that I try and use a lot, and I think it's got to be true. And if you like renewables, you'd better like transmission. Because the fact of the matter is, as we think about renewables integration and more renewables integration, that means that the backbone of the transmission system has to be there. So what would you have to believe to see more of the utilization of transmission? I think you're already seeing it. So there is an order from the Federal Energy Regulatory Commission called FERC Order 1000. And in a nutshell, it basically required that utilities as well as regional transmission organizations have some way to allot a competitive process for transmission infrastructure build out. And so Miso, as an example, has 2 projects now that it's announced. One is actually in the process of being built. It'll be done by the end of 2020. We have another one that's going through the current bidding process now. But it wouldn't take too many logic leaps to jump to a conclusion that said, with all of this distributed resources, think about your distribution system along with your large transmission system. And what would you have to believe to say that you need more blockchain type technology as you get lower and lower down on the distribution side? So I think it's a very interesting question. And while I haven't heard of anything specifically, I don't have to think too many logic jumps ahead to think that that might make some sense or that could be applied. So we're not too far away, I don't think, from those conversations starting.
Fantastic. So, one of the areas where we've seen, huge growth in blockchain has been global financial services. So globally, financial services companies spent about $1.7 billion on blockchain developments last year. We just saw in South Korea, a lot of the banks now are migrating to utilizing blockchain as a part of their identity verification, KYC processes to improve and may actually make that process a lot cheaper for them as they're bringing on customers. So clearly blockchain is a technology that's here to stay, that people are going to continue to utilize. And one of the efforts of AABE is not just about looking at the technology from a technology standpoint, but it's also looking at it from an entrepreneur standpoint. And so one of the questions, that we always have to ask is, how do we take advantage of this emerging technology for those of us who want to build businesses that either support or that are directly involved in blockchain? So the question for the panelists is, do you guys have any ideas or suggestions for individuals who have a more entrepreneurial bent, who are looking at opportunities within this industry today?
Yeah, absolutely. So one thing, I definitely would say that, if you want to get involved with blockchain, it doesn't necessarily mean that you have to, come up with a token or a coin. I think a lot of people get, caught up into this idea that the blockchain, you can, create these cryptocurrencies, and they get involved with that. But more so, I would definitely start by saying that just familiarize yourself with really, the core aspect of the blockchain, which is, distributed storage. This idea of the ownership within the blockchain. But yeah, I mean, there's definitely different use cases. I would say that blockchain is a good, although there's definitely ways that you can change a process entirely and supplement and substitute that with blockchain. But I definitely think that there's other things out there that blockchain can be used as, in addition to what that current, thing is as well.
Got it. Todd or Marc?
I would say that blockchain seems to me to be particularly applicable in areas where the finance needs to be accompanied by large amounts of either transparency or accountability.
Yeah.
So I think the trust factor looms large for blockchain markets. It's about where you need to have a financial transaction where you can have a high level of that accountability and trust. And so I think that just that simple combination lends itself to potential blockchain applications in a number of different areas. And I would encourage those with entrepreneurial minds and some experience in different industries to think about in their own industries or in their own sectors of the economy where that combination is required or could be really useful, financial transaction and a high degree of accountability, and think about how blockchain could help those markets. For instance, Dondrey mentioned before an example of medical records technology. So that's a particular example combining those two areas, high levels of finance involved and also needs high degrees of accountability and trust involved in those markets. So for those with an entrepreneurial mind, I would say think along those lines and maybe some blockchain applications will come to you.
Yeah, I think both of those are good. I think the only thing I would add to that is I think if you're just focused on blockchain, you're probably pigeonholing yourself a little bit. If you think back to one of the things that Marc said, which is one of the many things I wrote down, is this is designed to harness data, to leverage technology, and to really look at information in markets. And what you get out of that is more mobility, more capabilities, and more efficiencies. Mm-hmm. And so when I think about those things, I don't just think about blockchain. I really start to think about data and data analytics.
Yeah.
And so if I'm an entrepreneur, if I can get my twins to pick a profession that I think is going to serve them well over the next 10 to 20 years, I go straight to data analytics. And I think if you have an entrepreneurial spirit with understanding the data sciences area and the data analytics area, I think you can go very, very far. I think you can go far in the energy industry. I think you can go far in a lot of places. But in the work that I've done there with a whole lot of different companies, everything from the Walmarts and big IT companies of the world, data analytics is front of mind for all of those. Because let's face it, right? That data is going to be the currency that we spend a whole lot of time talking about, thinking about, and better understanding over the next 5 to 20 years. So I would just expand it a little bit for those that are looking to be entrepreneurial and think just a little bit beyond blockchain and start to think about that little bit bigger picture.
Absolutely. And what I would say in my practice is we advise clients, and one area I think that's a significant opportunity for people as well is just understanding, and creating use cases for these tokens and utilizing these blockchains. I think that every blockchain today, their goal is to have as many use cases as possible. And so there's certainly some significant opportunities there that people should be aware of. So overall, I think this has been a fantastic conversation. I see that we're getting close to the end of our time, but I do want to provide all the panelists with the ability to do a 1-minute close. So if you guys have some last-minute closing ideas or thoughts to share with the group, we'd appreciate it. And again, we'll just go in order and reverse order this time and start with Todd.
Yeah, I would say if we think about this in terms of blockchain, it is a bridge to a bigger conversation. It's the conversation about data ownership, data management, and understanding the value of that data in tomorrow's, especially with the utilities, in tomorrow's portfolio and demand and supply landscape. This leads to better conversation. This leads to more efficient and reliable markets, and that's why Miso is interested in it, and looking forward to being involved in further conversations. And a special thanks to Abe and everybody involved for giving us this opportunity.
Marc?
I would echo Todd's comments, and I would say that as another thing Todd said before is that, we're thinking about the incorporation of renewable energy assets into the grid using blockchain technologies. And like Todd said, that's going to definitely require transmission distribution as the backbone. So I think that as we continue going forward to focus on blockchain and its capabilities for integrating renewable energy and other distributed energy resources into the grid, we need to think about the larger sort of system and how that's all going to work. And our federal regulators, from a policy perspective, I'm always thinking about the regulatory aspect. And our federal and federal regulators and state level regulators are starting to think about how that will work. And so I think that for those of us that are interested in the development of blockchain markets, we want to keep an eye on what happens on the regulatory front, as I think that will then be a significant driver for what happens on your local and municipal levels.
Yeah, absolutely.
And DeAndre?
Yeah, sure. So yeah, I would just say, the thing about blockchain, yeah, it's not, the solution for everything or the hot sauce for everything. There's definitely things that can be used, that don't include blockchain. But I think what blockchain really brings to the table, of course, is the transparency aspect, the collaboration aspect. Really, it's allowing us to be, kind of more productive, in managing data and its openness. But certainly, really the trust aspect is really what the blockchain brings to the table, and what certainly I'm most excited about, and seeing where it goes.
Fantastic. Well, again, this is Chet McGensy, and I just really am honored to have been the moderator for this panel today. Again, I want to thank all of the staff at AABE, and of course, Paula for her vision and leadership in terms of engaging in this forward thinking and really bringing AABE ahead of the curve, so that we can start thinking about and looking at emerging technologies, ways to be ahead and ways to really win and to think outside the box. So thank everyone. Thanks you guys for participating, all the panelists for your time and your effort, and everyone for their attentiveness. This concludes our podcast for the day, and hopefully there'll be some great more to come. Thanks.
Great. Thanks.